Taxes. The year is flying by and April 15th is fast approaching. If you're like a lot of folks, you haven't filed your taxes yet, especially if you owe. Financial expert Barbara Walker-Green joins us now to talk about some tax deductions, refunds, and the dreaded audit. Okay, first of all, we talk about it every year. What's the number one thing people forget or don't know to deduct?
One of the big things I think this year, especially because of the fiscal cliff rules, is the sales tax deduction choice. You can choose between taking the state tax or the sales tax, whichever is higher.
Is that new though? Because I thought I noticed that in years past.
Well, the choice is new. You can choose between the higher of the two. And there's actually a tool on my website that will take you right to that link, which is personalwealthadvisor.com, and you can do that calculation.
Well, see, here in Texas, though, we don't have a state income
Exactly.
tax, so you take the sales tax.
Very easy choice in Texas,
Yes.
but in 8 other states. But there are some states that don't have that, have both the sales tax and
Absolutely.
state tax.
And you know what, though? If you're going to take that sales tax deduction, then that means you got to save all the receipts of everything you bought all year, right?
Well, some, and there's a standard calculation in there, and there's the additional if you have receipts for it. So if you have receipts, it helps to boost the deduction, but there is a standard deduction in there.
You got it. Okay. See, I didn't know about the standard deduction, Barbara.
Yes.
And so, like, every year, I like go through and add up all the receipts.
Well, that's a good thing. That
takes 3 days.
It's a good thing.
Okay. Next thing, what's the number one thing that will get you audited?
Oh, I can tell you the big difference is in your income from one year to the next, but another big thing is having large amounts of income that is not subject to taxation. And though we don't give tax advice advanced wealth, we do work very closely with CPAs, and they tell us that is one of the number one things that causes an audit.
And then what about people, you said the biggest thing is a big change in your income. What about people who lost their jobs, and of course that chopped off half or all of their income?
Well, that's true, but that still doesn't avoid the possibility for an audit.
Really? And what
Yes.
happens what's the first step if you get a phone call, you get a letter? Walk us quickly through the process.
Well, I would say, number one, to be organized. That is the big thing that the IRS is looking for. Some people have, a large number of exemptions, can raise red flags, so you want to have good, clean records.
But if you're going to be audited, what is the process? What happens? Do you get a phone call? Do you get a letter?
You get a letter. You get a letter first, and they'll let you know which year they're auditing, and they'll give you enough time to gather your documents. Hopefully you have good documents. Once you get that letter, then they give you a chance to respond to they give you a list of things that they're auditing. They'll say, this is what you put, this is what we feel it is, prove the difference. And you have to prove it.
And for people who lost a job, so maybe they're saying we didn't have that income, how do you prove that negative?
Pretty easily. If you were laid off, you probably have some type of documentation saying you were laid off, and that's pretty simple.
Gotcha. Okay,
Yes.
good to know. And
All
should
right.
people expect to go to jail after an audit? Or no, usually they just want to clear it up.
They just want to clear it up.
All right.
And most of the time, the IRS will work with you.
Thank you, Barbara
Okay.
Walker-Green.